Imagine you're looking at a price chart and you see a candle that looks small at the bottom, with a long wick stretching upward like a thin needle piercing the sky. At first glance, it may seem insignificant, but in reality, this one candle can quietly signal a shift in power, a moment where sellers begin to lose control and buyers start stepping in. This is the inverted hammer candlestick, and if you truly understand how to read it, it can become one of the most powerful tools in your trading arsenal. Let's slow this down and really feel what's happening inside that candle. The inverted hammer appears after a downtrend. That context is everything. If you ignore the trend, you're already making a mistake. This is not just a shape, it's a story. Price has been falling, sellers are confident, maybe even aggressive. Fear is in the market. Retail traders are panicking, weak hands are exiting, and the sentiment is clearly bearish. Now, suddenly, on a particular day or time frame, the market opens, and instead of continuing straight down, something different happens. Buyers step in and push the price significantly higher during that session. That's why you see that long upper wick, but by the time the candle closes, sellers manage to bring the price back down near the opening level. So the body remains small, near the bottom, and the wick stays long above it. Now here's where most beginners get confused. They see that the price got pushed back down and think, sellers are still strong. But that's only half the truth. The real insight lies in the fact that buyers were able to push the price up so strongly in the first place. After a sustained downtrend, that kind of upward push is not random. It's a signal of potential demand entering the market. Think of it like a battlefield. Sellers have been winning for a long time. Then suddenly, buyers launch a strong counterattack. They don't fully win the battle that day, but they show strength. They prove they are present. That's what the inverted hammer represents, a warning to sellers that their dominance may be coming to an end. But here's the critical part that separates amateurs from professionals. The inverted hammer alone is not a buy signal. It is a potential reversal signal. And potential is not enough to risk your money blindly. You need confirmation. Confirmation usually comes from the next candle. If the next candle closes bullish, especially above the high of the inverted hammer, that's when you start paying serious attention. That tells you buyers are following through. It's no longer just a possibility, it's becoming a shift in momentum. Now let's talk about how to actually trade this pattern in a way that can generate consistent profits. First, you must identify a clear downtrend. Not a sideways market, not a random fluctuation, but a proper sequence of lower highs and lower lows. The stronger the downtrend, the more meaningful the inverted hammer becomes. Second, look at the location. This is where most traders fail. An inverted hammer forming in the middle of nowhere is weak. But if it forms near a strong support level, a demand zone, or a previous swing low, its reliability increases significantly. Markets respect levels. Institutions place orders at levels. If your candle aligns with those levels, you're trading with smart money, not against it. Third, analyze the volume. If the inverted hammer forms with high volume, it suggests strong participation from buyers. That's exactly what you want to see. Low volume means lack of conviction. High volume means real interest. Now let's talk about entry strategy. There are multiple ways, but one of the safest is to wait for confirmation. Enter only when the next candle breaks above the high of the inverted hammer. This reduces false signals and increases your probability of success. Yes, you may enter slightly higher, but you're trading with confirmation, not hope. Your stop loss should be placed below the low of the inverted hammer. This is logical and disciplined. If the price breaks below that level, your entire setup is invalid. Don't argue with the market, accept the loss and move on. For targets, you can aim for the next resistance level or use a risk-to-reward ratio like 1-2 or 1-3. Never take trades where the reward is smaller than the risk. That's a long-term losing game. Now let's address a very important truth. Not every inverted hammer will work. In fact, many will fail. That's completely normal. Trading is not about being right every time. It's about managing risk and maximizing gains when you are right. Even if you win only 50% of your trades, you can still be highly profitable if your winners are larger than your losers. Another key factor is time frame. Inverted hammers on higher time frames like daily or weekly charts are far more reliable than those on lower time frames like 1-minute or 5-minute charts. Lower time frames are noisy and often manipulated. Higher time frames reflect stronger market sentiment. Also, avoid trading this pattern during major news events. News can override technical patterns completely. The market doesn't care about your candle when big economic data is released. Let's also talk about psychology. When you see an inverted hammer, don't rush. Don't feel like you're missing out. The market will always give you another opportunity. Patience is what separates consistent traders from gamblers. You also need to avoid overtrading. Just because you learn this pattern doesn't mean you should take every inverted hammer you see. Be selective. Quality over quantity. One high probability trade is better than 10 random trades. Now imagine combining the inverted hammer with other tools. For example, if you use RSI and see that the market is oversold when the inverted hammer forms, that adds confluence. If you see divergence, where price is making lower lows but RSI is making higher lows, that's even stronger. Multiple confirmations create high probability setups. You can also combine it with moving averages. If the inverted hammer forms near a key moving average like the 50-day or 200-day, that's another layer of strength. The more factors aligning in your favor, the better your chances. Let's walk through a realistic scenario. Price has been falling for several days. It reaches a strong support zone where it has reversed before. You notice an inverted hammer forming with high volume. The next candle opens and moves upward, breaking the high of the inverted hammer. That's your signal. You enter the trade, place your stop loss below the low, and aim for the next resistance level. Price continues upward, giving you a clean profit. That's how structured trading works. Not guessing, but following a process. But now let's consider the opposite. You see an inverted hammer, you enter immediately without confirmation, and the next candle drops sharply. You panic, hold the loss, and hope it recovers. That's not trading. That's emotional decision-making, and it leads to consistent losses. Discipline is everything. A strategy without discipline is useless. You must follow your rules every single time. Another mistake traders make is ignoring market conditions. If the overall market trend is strongly bearish, even a perfect inverted hammer may fail. Always analyze the broader market context. Trade with the trend whenever possible. And finally, understand this deeply. Candlestick patterns are not magic. They are simply visual representations of market psychology. The inverted hammer works because it reflects a shift in sentiment from fear to potential confidence. Your job is to interpret that shift correctly and act with discipline. If you master this pattern, combine it with proper risk management, and stay patient, it can become a reliable part of your trading system. Not a shortcut, not a guarantee, but a powerful edge. And in trading, having an edge, no matter how small, is what makes the difference between losing money and building wealth over time. If you found this video valuable, like, share, and subscribe for more trading strategies, and comment below. Which candlestick pattern should I cover next? Engagement idea. Pinned comment. Type spinning if you want my personal trading checklist PDF.